Yeah.
Okay.
Okay, good morning. Welcome to the first part of doing the nominal ledger. For this section, we're just going to concentrate on the sales daybook, bringing the sales daybook into the nominal ledger. So as the note says, you're going to debit the debtor's account. So here's the debtor's account. It's the end of February, so you're saying the 28th of the 2nd, 08. The details are sales, because you're coming from the sales daybook. You've got a reference at the top of the sales daybook, and you're bringing it through here. SDB1, sales daybook, and you're referring to page 1. That would move on accordingly. So we're going to debit the 10,361.63. The next entry is the column of the goods, the net sales, whichever you call it. So we're going to open a sales account. Okay, again the date is the 28th of the 2nd, 08, and the details are the sales. Okay, or you can put sales daybook, you're using the same reference, SDB1, and the note says credit. Okay, sales are always credit. And if you can remember either sales being always credit or purchases being always debit, it'll help you to break down the opposites, and that's something that we rely on. The next entry is the VAT column. So you have a VAT count. Now you'll notice this is a little bit bigger because we have a little bit more entry. So again, 28th of the 2nd, 08, details is sales. Okay. Again, the reference is SDB1. Okay, but it's important to keep following them through and not leaving the columns blank, intending to do it later, because the reality is you don't come back to do it. And it's an important part of the audit trail. So the note says credit the VAT. So there we go. Now, you're crediting the VAT because you credited the sales. The VAT always stays with the analysis code. Okay, so that's actually now the 3 entries, sales daybook entered. And because your goods total and your VAT total added to the 10,361 to your debtors total, your ledger stays in balance all the way along if the entries are correct. So now we're going to move to the sales returns, which is your credit notes. You're going back up here, as you see, to your debtors. Okay, 28th of the 2nd again. Sales returns. Okay, now this on your sheet, the sheets that you're working from would have sales returns DB1. Again, it's page 1 of your sales returns daybook. So you're bringing that in, again, keep doing it, and it's the credit side. And the figure is 1732.72. So invoices and credit notes, one is the opposite of the other. So what you do with an invoice, you're going to do the opposite with a credit note, if you like. The next column is the goods. So we're going to open a sales returns book. Okay. Now, again, as we've discussed, sales returns should be kept separately, but if companies have small amounts of sales returns, and some companies do, you might be using it in the sales account, but this is the correct thing to do. 28th of the 2nd, 08, sales returns, because again, that's where it's coming from. Your reference. Okay, and the note says to debit your sales returns because it's the opposite of your sales. And again now, the VAT column. And bring in the reference again, and the note says debit. Okay, and because these figures have added across, and we've already checked that, you are, again, keeping your accounts balanced. Now we need to move to the cash receipts. Okay, so we have a very short cash receipts book. We have debtors, we have capital, we have rent, and we have interest received. Now, the capital account, we've put this in, but it's just to show you what you might do. You might never come across capital in your bookkeeping, but It's just to discuss the different types of accounts. All right, so this money has been lodged to your bank account already. Okay, so you would probably be working from a lodgement book or from your payment book, okay, which you've actually written up. So we need another sheet of ledger paper. We're going to open a bank account. Okay, and here we're saying that the money in is debit. Okay, now for those of you that are used to looking at your bank account, money in on your bank account is on the credit side, but for us it's going to be on the debit side. Okay, now the reason for that is that the bank, you have given the bank the use of your money, so they are liable to you for the money. But in our books, the money that we receive is an asset, so it's on the debit side. Okay, in the bank account it's credit because the bank are liable to you for that money. Okay, now again, the reference you have on your sheets, cash receipts, daybook 1. Okay, so we're bringing that in, cash receipts, DB1. Okay, so again, debit side, because that's our asset, and let's face it, money coming in is one of the greatest assets in a company, so long as it keeps coming. Now, just for, again, we have the money that came from our debtors separated into a separate column to know what we received in this month. So you've analysed that, and it's particularly useful right now to bring across to show us the net picture of what has happened with our debtors. Now, whether you say cash receipts or cheque receipts, it's the same book, but historically we called it cash. Okay, and again, it's reducing what the debtors owe. It's going in on the credit side. Now, we're going to take the calculator and calculate the balance. Okay, so 10,361.63 minus 1732.72, and you're minusing because it's on the opposite side, it's a credit, and you're minusing the 6780. We're getting a figure of 184891. Now it's important that that figure goes on the same line, because in a real set of books this would be a page, and the next month will be coming straight in underneath it, leaving no gaps and no room for error or for anybody to correct or to amend what you've done. If amendments needs to be done, it's preferred to cross it out and write it as close by it as you can, okay, rather than using typics or any other type of correction. So that figure of 1848.91 should be the list. If you added up all your debtors' accounts, they should come to this. And that's your checking mechanism, as you know, from your sales ledger, doing your debtors' ledger. And it's important that those things are done as you go along, so that you know at each stage you're keeping things in balance. Now, so we've looked at the bank, we've looked at the debtors, so now we're coming over to the capital. Capital, as we've discussed, is the asset, is the liability, but a necessary one. The owner has given this money to the business, and the business is liable to the owner for this money for the life of the business. The 20,000 is credit because it is a liability to the company, okay? And if those of you that have watched Dragon's Den, people go on Dragon's Den to increase their capital, to increase that money so that they have it to spend within the business. So again, the 28th of the 2nd, cash or bank, okay. All right, the reference again is CRDB1, and we've said it's on the credit side because it's a liability. Now, it's a big liability in the beginning of a business, but an essential one. The next account is rent received. So rent received occurs where you are renting out some property and you receive rent in. So it might be the room above a shop where there's rental income coming in, something as small as that, or where you're subletting. Again, you can have cash or bank. Okay, C or DB1. I'm telling you there to put it in on the credit side because it's a gain, okay? This account is considered a gain. Rent received would be a gain that you would know is coming to you once maybe you had followed up with your tenant. Okay, we now have interest received. Okay, and again, companies get interest because they can put money on longer term accounts and get some amount of interest, where you and I maybe don't. Again, cash or bank. Okay, C or DB1. And credit 55. Okay, so that's where we are now. That's that full side of the sales ledger lodged, or posted rather, to the nominal ledger. If you ran a trial balance at this stage, it should balance because we have completed our double entry, we have debited and we have credited. And even in the position that we were in with the VAT, we'd still debited one amount and credited the full on the other side, or the VAT on one side, the analysis, whichever the analysis code on the same side, and then it was balanced by the other figure. So we're balanced the whole way along. So that's it for this part of the ledger. I'll post another video doing the sales ledger and a separate one then for the purchase ledger, and a separate one for the trial balance. Thank you.